going through some technical analysis of some technology stocks here. Some of them I just put on my watch list. I did some research online and asked some questions in social media. Some of these are new to me. Some are pretty volatile, trading on lower volume. So I've sorted these in average volume over here. And first we'll start out with Apple. Apple's been overbought leading up to the split. I'm holding this. I like the company. So if we look at a long-term perspective here, we've got this rising channel which is widening out, and we're currently at the top of this channel. Price can stay overextended for quite some time, or even these channels can become invalid or change. So I'm not really interested in adding more right now. I'm just holding it. But we're seeing the 200 period moving average coming in here, and it looks like we're starting to react to that. But we do have a downtrending Ichimoku cloud on the daily chart here, and our downtrending moving average lines here, Kijun-sen line, which is curving down onto the price right here, indicating some downtrending pressure. We're still below the Tenkan-sen line right here. We are getting a TK cross though, okay? The white line here, Tenkan-sen line, follows price the closest. It's a 9-period moving average. I believe the Kijun-sen line is a 26-period moving average, but it smooths out over periods of time. So we're getting this TK cross, but we're still below these moving averages. We've got the 200-period moving average coming up. So price could get interesting here. Just watch and see how it reacts. I'm not really interested in adding more right now. We can see sort of a short-term rising trend line right here, but I don't use that short of a term trend line very often. It's not a very reliable indicator, but it's normal for price to react to these things and then ultimately could fail. So it's just something to watch. Intel's been performing pretty good. We've had some moving averages cross. This thing was an underperformer for a while. I picked this up on what I believe was temporary weakness. I could see this support area here. See all these lows right here? So this is actually where I bought it, and it's done pretty well for me. I don't really see an opportunity to get in right now. So yeah, this was a nice support area right here. We broke below this rising channel. Long term, it looks pretty decent. It looks like we may be seeing some topping out action right here. Let's zoom back in here. Where was this other high? Over here. Yeah, so we're reaching this previous high right here. So I try to avoid starting new positions in places like this. Not really interested in taking profits or closing this trade. These are just some companies I stay long. Apple, Intel. I'm in Microsoft. Microsoft's holding up pretty well. Still trending above a green Ichimoku cloud. The 200 moving average is pretty much your last line of support. We typically don't even get there. The 100 period moving averages, it tends to bounce from there. So don't really see an opportunity to start a new position right here, but it's doing pretty well. Micron has been on a tear. I'm holding this one as well. Went through this consolidation period right here, and then a breakout. Broke above this previous high right here. Let's take a look at the long-term rising channel. We can get some pretty volatile long-term swings in price here. So this thing kind of in the middle of the channel, or upper middle area of the channel. I like to look for better opportunities to start new positions than what I see right now. I think finding opportunities to start new positions is getting tougher in the current market environment. We're seeing a lot of momentum stocks sell off. Market taking profits on stocks that are up big in a short amount of time. BIDU, I don't own this one. This one's pretty volatile here. Japanese internet provider based company here, from what I know. Huge gap up here, huge run up. I'd be careful about this one right here. We have had a pretty volatile drop and a nice pin bar at the 200 moving average. So if you're into short-term swing trading, this might be something to watch with this this green candle and long pin bar right here at the 200 moving average. I like to go down to a 4-hour chart. See, on the 4-hour chart, we're just oversold. See how we got so far away from the cloud, and this is a lot of down momentum right here. Excuse me, and these moving average lines are flattening out, indicating that's a downtrending resistance area. So you're basically trying to catch a falling knife if you're starting a position here. I just see this as an oversold bounce right now. Oversold bounces are good for day trading, but I'd be careful with that. XLK is a technology sector ETF. Seems to be holding up okay. It looks like we're seeing some loss in momentum. We got a red cloud forming here, but it's pretty thin. We've seen that before in the chart history. Of course, here is the COVID crash, and we've had a really nice run since then. So like I said, the current market environment, the market's just taking profits on stuff that's way up in the last 10 months, year. Kind of seeing the head and shoulders top right here. It's not really well pronounced, but I'm kind of seeing that in a lot of charts that I looked at that have had a big run. Getting a response right here from the 100 period moving average. These things can trigger a response, but sometimes it's short-lived and then ultimately fail. So it doesn't necessarily mean that that it's a good buy opportunity, but seems to be holding up okay. Just pretty risky, I think, opening new positions right now, some of these. So if you're going to trade this, I would look for it to trade this 100 moving average. Maybe scaling into positions, starting with 30% position. And if we see a drop down to the 200 moving average, put on another 30%. If you're looking at long-term investing and stuff like this. Applied Materials, I'm in this one. This thing's had a tremendous run, 52-week high. Responding really well to the 50 moving average and a nice uptrending cloud. Ichimoku works really great when you have when something is trending. When you have consolidation, it doesn't really help you that much. So right here, we fell below the cloud, got back above and failed again, broke below, back up, and then breakout. This is a really nice breakout. We're staying above the Kijinsen line here in red. So if you're into momentum swing trading, that's how I would follow this trade right now. Is you know, we had a drop down to the 50 moving average. So 50 moving average is a good way to manage this trade right now in the cloud. We don't want to see a candlestick down here in the cloud. That definitely indicate a loss of momentum in this rally. PayPal, we've fallen below the cloud here, sort of a head and shoulders pattern right here. This thing's had a pretty big run. I don't own this one, but I'd like to invest in this when I see an opportunity. It's just hard to commit to starting a new position when you see an overextended trend like this. We may not get back down to a trend line. Let's see. Let's draw a trend line here. No, I don't really count the COVID crash. It was that was a beast of its own. So let's draw it like this. We're kind of working our way back down to a rising trend line here. So this is kind of where I'd look for maybe an opportunity to get in. I'm watching, we've got downtrending indicators here, so I think this is going to continue to sell off some with this head and shoulders pattern. And so I'm liking it down here, maybe around 220, 210. So I'll be watching that. NVDA, it's another one that I missed out on this rally because it just took off so fast, and I've got a lot of others I'm interested in. So we've had this long consolidation period now after a huge rally. Let's zoom out to 5 years. This thing can stay overextended for quite some time. This trend line, it's hard to put a trend line on something like this because this thing has just been on such a tear. Pretty steep trend here compared to what it was years ago. So this is a pretty good stock. So I'm watching this for kind of seeing an opportunity right now. On the short-term basis, we've got the 200 period moving average here, and we've got this lower end of the consolidation base right here. We're kind of getting these reactions. So this is mildly interesting right now. I think it's overextended. So we'll see how it reacts here. Ultimately, I'd like to see it back above the cloud. And then we've got this major peak here to contend with as resistance at $615. So I'm waiting on that one. I like to look for opportunities, temporary times of weakness. So now we're getting into some of our lower volume trader companies. And some of these I'm really not that familiar with. I'm just looking at, they come up on my radar through internet searches and social media comments. Tdoc, not really sure what this company does. Oh, it's a healthcare provider, virtual healthcare services. So this is getting hammered right now because, well, COVID's winding down and the demand for virtual healthcare services is going to fall off. But I found this one online that they think it's a good one to invest in, that the fundamentals look pretty good. So I'm seeing this, we were overextended here, and I'm seeing this long-term rising trend line right here. So as far as fundamentals, do your own research. and see what you think about it. I'm kind of seeing this support area right here where we're at right now. Let's see, draw. I just see one other low right here. We're kind of putting in some pin bars right here. We've got the rising trend line coming. Could be interesting. This thing's pretty volatile. Average volume is 4 million. ROKU, ROKU Incorporated. This thing went on quite a tear. We're kind of at the top of a rising channel here. So I'd like to see this down below about 250 or so. And I'm not really sure. Television streaming platform. Yeah. So this is kind of, this fall off right now is kind of COVID related. More people staying home, watching television streaming platform. We rally, COVID winding down, we're falling off. So this could be considered temporary weakness. Could be interesting. Right now we're in a momentum sell-off, so I don't try to catch a falling knife. We're trending down pretty well here. Tinkinson line is indicating momentum. We've got the Kijinson line coming down below the cloud. So I like to wait for indication of a new uptrend. But if you like to try to get things as cheap as possible, you might want to start trying to scale into this. I would say maybe 10% of a position right here and add as it gets lower, but I'm not really interested in doing that myself with this one right now. Just something to watch. VNT, Vontair Corp. Industrial technology company, offers technical equipment components. Let's see. Oh, I drew this. Excuse me. This must have been a recent IPO because there's not much chart history here. October of 2021 is the farthest back I can go on this. So I'm seeing this kind of support area forming here. So this could be interesting if you like the story and fundamentals of this company. Let's see if we had anything in metrics right here. Forward PE is 12.68. Earnings per share growth year on year is negative 22.5. Quarterly sales growth year on year was 9.68. So it's kind of speculative, it looks like. So as far as technicals, is mainly what I like to look at is these technicals. And then we need to decide on the fundamentals on our own bull case on that. Kind of a head and shoulders top type thing here, and then we sold off. And like I say, it looks like we're trying to find support right here. So we need to see how we react when we get to the downtrending cloud. Tinkinson line is starting to curve up. Kind of a risky play, really. I suppose if you want to enter this trade, I would base it off of this support area here. Adobe, I'm in this. I like this company. We were overextended. We've been consolidating, underperforming. Some of these underperforming large cap stocks, S&P 500 stocks are starting to take off. The market seems to be rotating out of some of the big momentum gainers and picking up some underperformers. So So we've got this long-term rising trend and this descending channel we're in right now, working our way back down to the trend line here. So I'm keeping an eye on this channel. Maybe buy opportunities at the bottom of this channel if you want to start trying to scale into something like this. Looks like this could continue going down for a while. Mtch. I'm not really familiar with this one. Let's see if I have. Match Group Incorporated, dating products for its portfolio companies, which are available globally. Okay, dating platform related. That was probably pretty popular during COVID, since you can't get out to the bars and mingle. So this is selling off basically due to COVID winding down, I'm guessing. See another kind of head and shoulders top here. Bearish twist in the cloud forming. But we've got this long-term rising trend line and the 200 period moving average coming in. This weakness here could provide a buy opportunity. Dating platforms are a pretty popular way for people to meet these days. So this looks kind of interesting. DT Dynatrace Incorporated. Let's see what we got. Oh, I drew this support area right here. If you're interested in trading this, I would look for this support to hold. And we've got the 100 and 200 period moving averages come in right under it here. Let's see if we've got a long-term trend. This thing can trade pretty wildly here. We've got the COVID crash right here. We rallied up pretty good and then consolidated, and then we've broken above this consolidation here. So not a lot of chart history. We're only going back through April of 2020 or April of 2019. So apparently this is a fairly new company or new publicly traded. Volume is 2 million. COMS. I can't even pronounce that. Comes Sovereign Holding Corp. This thing is a volatile mess. Wow, look at these wild swings here from clear down here near $2 to $10.50. And we've kind of got this rising trend line trying to form here. I don't trade stuff like this, but somebody mentioned it in social media, so it came on my radar. Let's look at a 10-year chart. This is kind of ugly. It looks like we've broken this long downtrend here. So apparently some fundamentals of the story about this company are changing. We had this huge spike in volume right here. So this thing's seen an increase in volume. That was a huge amount of volume on this day. I didn't even really see, I mean, you'd think that volume would be a huge gap up, but I'm not really sure what that's about. I'll leave the fundamentals up to you. We're just trying to analyze these technicals and look for opportunities technically here. So using technicals to me helps you minimize your downside risk, because we're looking at this trend line here. So if I'm going to enter this trade here, I want that trend line to hold. We can see some wicks or pin bars drop below it. So basically this helps you minimize your downside risk by finding a technical area to trade from. Of course, if you see a huge gap up, this is definitely a selling opportunity with this thing. Google. So this comes in as a lower volume because due to the price of the shares. So I own Google. I think it's a great company to own. We're holding a nice trend line, testing the top of an uptrending cloud right now, and the 50 moving average. So we could see a reaction here. The way to read the Ichimoku cloud is that these flat bottoms of the cloud are good support levels. They're a little bit more reliable than the curvy top of the cloud, but in a nice uptrend, price does respond first to the top of the cloud. When price enters inside the cloud, it indicates indecision, and the price could go either way. So it indicates possible weakness, and the market's undecided if we're going to fall into a downtrend or continue an uptrend, basically. So one of the rules with Ichimoku, they say, is you don't trade inside the cloud. So it's neither a time to terminate a trade or to start a new trade. You need to see if we're going to break out in one direction or another. So to see price come down and test this, test the top, maybe come back down, eventually break out of the top, is a very bullish indicator. That's called the Kumo breakout, when price breaks out of the cloud. So we attempted a Kumo breakout here, fell back in, and right back out. So this was a bullish signal right here when we broke back out. And here we bounced off the cloud. These are buy opportunities. So you can base a buy opportunity technically on the top of the cloud. So if it doesn't hold, then you can minimize your losses. Zen Zendesk Incorporated, software development company. Help organizations understand and manage customer relationships. This thing is going through a momentum sell-off right now. Probably COVID wind down based. Big rally through COVID. COVID's winding down, we're selling off. This could be considered temporary weakness. Fundamentals of the company aren't broken. We just had this big rally on COVID, and then now we're pulling back to this long-term trend line. 200 moving average is coming in. Looks like we're starting to react to that moving average. If you're interested in scaling into this long term, I would start with a fraction of a intended position. We could pull back down, kind of like in this 120 area, closer to the trend line here, closer to this 200 moving average. We've fallen below the 50, fallen below the 100. Momentum sell-off here. We're kind of hugging this Tinkinson line here. Looks like we're trying to get above it, but we got some down momentum in this one here. It can take quite a bit of time for these chart patterns to work themselves out and eventually get back above the cloud here. So patience is key, I think. ARW. This is new on my watch list. Not too familiar with this one either. Commercial users of electronic components and enterprise computing solutions. Commercial users. been on a pretty nice uptrend here. Let's see, 10-year chart. Yeah, this looks a little overextended. Huge rally out of COVID here. We're kind of at the top of a rising channel. I don't really see a good opportunity to open a new position here. This is could keep going, but I just let's see here. It is holding a nice uptrend though. It's definitely respecting this 100 moving average and the cloud. So I would just be prepared to trade something like this rather than just open a position and forget about it. That's just me. I like to look for better opportunities than that to start new positions. Snx Cyanx Corporation. This is kind of interesting. I don't know what caused this huge gap down here. I tried to find something online. I couldn't really find anything. But that is a huge gap. A lot of times price will come back up to try to fill about 50% of that and then start to fail again. So I think this is something to be very careful with. We do have this long-term rising trend line here. This thing is kind of a volatile mess here from COVID on. So it's pretty risky trading to me. With this long-term rising trend line, we seem to have responded there. This cloud does not work very well because of this gap down that we had. It's just kind of this weird square block thing here. We've broken out of it. So for a short-term swing trade, momentum trading, you want to look for price to hold this Tinkinson line. And this momentum's awfully fast, so this is high risk. We're getting pretty far away from the cloud here, and our moving averages are widening out, indicating this is at more higher risk of pulling back. The further we get away from the cloud, the more likely you are to have a pullback. Maybe a pullback to the Kijinson line could provide an opportunity. TYL, another one that took a huge gap down. I really don't like to trade stocks that trade like that. And I drew a few different trend lines on this one. Let's see, 10-year, okay. We've got some different trends going on here. Really long term, we kind of broke out of this trend line here, so this is not really valid anymore. And then we had another trend line forming here, and then we've taken off from that. So depending on which trend line you want to trade, I tend to like this trend line right here, and I think that price is pretty overextended where it's at. It's a pretty volatile drop right there. Tyler Technologies, provider of information management solutions and services for the public sector, focuses on local governments. Kind of lower end of the volume here, only 416,000 shares average volume. So that's all I have on my list right now. If you have anything you're interested in, you can leave a comment or contact me, and then I'll see about getting on another review. All right, that's it for now.